Let's welcome our first guest then. Amit Khurana joins in from Dolat Capital. Amit, hi, good morning. What's the big call now? We've seen one-way rally about 1500 points on the Nifty, but now is it time to book profits or is it time to be aggressive buyer depending on the election outcome?
Well, yeah, I mean, that's the question we've been grappling with the last couple of days. I think there are two ways to look at it. One, I think the biggest uncertainty that we've had over the last couple of years has been the lack of decision making on key issues, economic issues in particular. So I guess that issue getting over with hopefully a new administration led by the NDA assuming power, I think will remove that uncertainty. So from that perspective, I think we're probably going to be in for better times. At least I would give them at least 3 to 4 quarters of so-called honeymoon period. So you would probably be in a positive territory from where we are today, at least for the next 6 to 9 months, and then hopefully the reality checks will start playing in. The second is that if you've got a tactical position wherein you build some decent gains and quite sharp ones in some of the sectors and some of the stocks, you could probably take some money off the table and wait and watch as to how the policy environment unfolds over the next 3 months. So it's a difficult sort of choice to make, but our structural view remains on the positive side, and we believe that there are still pockets of opportunity to make some decent returns over the next 12 to 18 months. So that's how we are positioning ourselves.
Okay. Amit, hi, thanks for joining in today. Say the event risk is out of the way and the markets have, corrected or gone to levels on the upside post the election result tomorrow. After that, once there is that honeymoon period which you spoke about kicks in for the markets, where will the markets go during that period? Do you think that it would just be a consolidation phase and that we've seen the best of the gains already?
Well, yeah, I would not rule out that possibility. In fact, it will be all the more better that the market consolidates, waits and watch for the policy action to start unfolding, which usually takes at least 6 to 9 months. And therefore, a consolidation between, let's say, broad levels of 68 to a 75 on the Nifty for the next couple of quarters, I would not rule it out. I think that will be very healthy for the markets to set a base. And as numbers start improving, then we could take the next leg up. Of course, this is at a broader level. I mean, stock-specific action will keep happening depending upon the news flow and how the sectors, policies and all those things change.
Okay, Amit, you do track at Dolat Capital a lot of FI money, and in terms of what's happening, especially in the derivatives market, any sense that you can get from that in terms of whether the market is close to peaking out or there could be further gains? Is there something that you could tell us from the data that's available to you?
Well, from what we understand and what we've been observing in terms of FI behavior seems to be suggesting that there is a lot of structural money which has already come in. What we are now seeing is a bit of a tactical flow in the last few sessions, and probably a little more tactical flow could come in over the next week, 10 days, assuming the results come on expected lines. But this will be probably too hot money to really come in and go out, probably extremely tactical positions for a 10-15% blip here and there, and they could move out any time. So that's how we're reading the derivatives data at this stage. Our sense is that probably 68, 69 seems to be the base from the way the trading positions are being held at the FI level at this level.
Amit, how would you position yourself within the banking space now?
Well, we have had a preference for the private sector banks at a structural level. Within the PSUs, we were only favored Bob for some time. And that remains. I mean, the results were pretty positive, and that seems to be the odd bank out of the PSU bank which have been facing issues on the NPA side. PNB was a bit of a disappointment for us, and therefore, so in terms of pecking order, it becomes SBI goes up the curve for us, and Bob stands there. And amongst the old private sector banks, we've had a preference for Karur and Federal for some time, and that preference stays for us at this stage. So structurally, we are seeing that banks, you could either take a earnings growth kind of a call, wherein the private sector banks will be the play, or you could take a delta play kind of calls, wherein you will have banks which have had high issues on the costing and lower NIMs for the last so many quarters, and they will start playing for the better now. And so that's where the call for our old private sector banks like Karur and Federal comes into play. So that's how we're positioning. Preference for ICICI Bank on the private sector side, SBI and Bob on the PSU side, and Karur and Federal for the old private sector banks.
Amit, what about the real estate, infrastructure, capital goods, the kind of stocks where we have seen about 30 to 40% rally ahead of the event? Good time to book profit, or would you stay invested there?
Well, I'm not sure so much about the real estate. We don't officially cover that. From the capital goods, we've been recommending Voltas for quite some time. I think while it may look like it's moved up, but we think there is potential for earnings upgrade over the next couple of quarters there. The low margin orders will go out of the system in the next quarter or two at best. And therefore we see some potential for an earnings upgrade potential for Voltas. So that's one name that we've been suggesting. Other than that, I think the policy environment will have to be conducive over the next couple of quarters to give the fillip for all these names to sustain these valuations and start showing earnings growth, hopefully from FY16 onwards. So we are, I would say, cautiously positive. But having said that, we are extremely stock focused rather than taking a macro call at this stage. Even now, I mean, it may sound a bit contrarian, but we are extremely focused on the stocks rather than the macros, and therefore we will still wait and watch from these valuations.
How would you approach NTPC then? That stock is higher because of the MSCI weightage that's gone up. It comes out with numbers today, and it is expected to be the only last quarter which is actually supposed to report a good set of numbers, simply because the CERC regulations that came out in Feb kick in for NTPC.
Yeah, I mean, that's an interesting one because the valuations have also taken a knock, and so there could be a situation that you could look at least from an execution perspective, if the environment changes for the better for power as a sector. So I would say that if one has to take a structural view, you could add 2 positions on NTPC at this stage. I think the valuations are fairly capturing the negatives all around that. The important part, of course, will be as to how much of a capacity addition that they can do over the next couple of years, and that starts reflecting in the way the market sees the valuations. But you have to take a long-term view on that. I mean, I'm not expecting anything to happen over the next 3 to 6 months on the volume front, of course.
Okay, Amit, before we let you go, just final call on Asian Paints. That stock is down 5% today, reacting to its numbers. How would you be placed on that particular stock?
Well, we have a positive view on paints structurally. We think that's one of the preferred categories to be on the consumer side, on the discretionary consumption in India. So I'm not too disappointed by the quarterly aberrations here and there. I mean, any declines will be an opportunity. However, our preference at this stage has been for Berger. We think that's from a risk-return perspective, we find that as a better positioned stock at this stage versus Asian. Asian trade has a huge premium. So while we've had tactical situations where we have preferred Asian, but at this stage we are preferring Berger from a structural perspective.
Okay, fair enough, Amit. We leave it at that. Thanks very much for joining in. So that's the fundamental view coming in from Dolat Capital at this point. For the